If you owe the Australian Taxation Office money, here's something nobody warned you about. You can lodge an objection, argue you don't owe a cent, and the ATO can still legally demand payment on the due date, because Australia runs a pay now, fight later system where the assessment stays enforceable while you dispute it. Right now, the ATO is chasing tens of billions in tax debt, mostly from small businesses and everyday individuals just like you. By the end of this video, you'll know 3 moves: check what you actually owe, request a remission of interest, and respond before your debt gets referred out, and your rights at every step. Here's the number that frames everything. The ATO is chasing roughly $56 billion in tax debt across Australia, mostly owed by small businesses and individuals, as reported by ABC News in 2023. But here's the part nobody tells you. A lot of that debt isn't the original tax at all. It's interest that's been quietly compounding on top. So here are the 3 moves we'll walk through today. Check your exact balance and split principal from interest, request a remission of the general interest charge, and respond before your debt is referred to an external collector. Each takes under 20 minutes and all of them are free. Let's start with the first hidden cost: interest. If you don't pay on time, the ATO automatically adds what it calls the general interest charge, or GIC, and according to the ATO's own guidance, your debt will grow each day it remains unpaid. There's no letter asking permission, it's applied by default, and it compounds. Now here's why that bites harder than people expect. On top of the daily interest, the ATO says it may use your future refunds or credits to repay what you owe, accelerating the cash squeeze. ATO if you don't pay guidance. The better position is requesting a remission of some or all of that interest if you have a valid reason, which the ATO confirms you can ask for. The second layer is enforcement power. If you don't respond after the ATO makes contact and sends a pre-referral warning, the ATO can refer your debt to an external collection agency and take firmer or legal action, according to its guidance. That's the moment letters turn into something much harder to ignore. And here's the long-run cost of inaction. A tax debt can remain recoverable for a very long time because Commonwealth tax debts don't expire merely with the passage of time, according to tax recovery analysis from Worrells. So delay turns a disputed or manageable debt into one that's harder to negotiate, more expensive because of ongoing GIC, and more disruptive when refunds and collections get intercepted. Let's kill the myth that traps people. The myth is, if I dispute the assessment, I don't have to pay until the dispute is finished. The fact, according to Legal Vision, is that the ATO generally uses a pay now, fight later approach, meaning the liability can still be due even while your objection or challenge is ongoing. So put the 2 costs side by side. There's the national picture, around $56 billion in tax debt being chased, ABC News 2023. And there's the personal picture, where automatic GIC plus the threat of external referral turns a single debt into something urgent, ATO guidance. The common thread is that delay, not a one-off fee, is what makes it expensive. Let me show you how this plays out with Mia. She's 38, runs a cafe, earns about $95,000 a year, and has a $48,000 debt sitting in her ABN business tax account. She's 27 years from retirement, and she thinks she's got time to sort it out. Here's what Mia found. Discovery 1, that $48,000 debt wasn't frozen while she argued with the ATO. Under the pay now, fight later approach explained by Legal Vision, the assessment stayed payable on the due date, even though she'd lodged an objection. There was no automatic pause just because she disagreed. Discovery 2, doing nothing was quietly costing her. The ATO automatically added the general interest charge, and in its own words, the debt grows each day it's unpaid, according to ATO guidance. So every week Mia waited, the bill got bigger rather than holding steady, and interest, not the original tax, was driving it up. Discovery 3, and this is the one that shook her. If she kept ignoring the letters after a pre-referral warning, the ATO could send her debt to an external collector, and since the 29th of January 2024, that agency is Recovery Scorp, according to ATO guidance. Letters she'd been deleting were the warning shots before that handover. Add it together, and Mia's starting point is a $48,000 debt, before any GIC compounding and before any external referral fees, ATO guidance. The modelling here is simple. The ATO states interest is added automatically and debts may be referred externally if she doesn't engage. So the main career-long cost driver is the length of her inaction, not a single charge. So could this be you? Sign 1. You've assumed that disputing the assessment means you don't have to pay yet. Sign 2. You don't actually know how much of your debt is interest versus the original tax. And sign 3. You haven't opened that ATO letter, SMS, or MyGov message. If any of those land, the next 3 moves are built for you. Here's why these 3 moves are worth 20 minutes of your time. They turn a vague, scary debt into a number you control. You'll know exactly what you owe. You'll have a real shot at cutting the interest, and you'll keep the debt with the ATO instead of a collection agency. This is general information, not personal tax advice. So let's walk through each one. Move 1. Check your exact balance. Log into MyGov, link to the ATO, open ATO online services, and view your tax account and statements. The thing to look for is the split. Separate the principal debt from the GIC and any penalties so you can see exactly which part is the original tax and which part is growing every day. 3 quick steps. Log into MyGov, link to the ATO, open ATO online services and view your tax account. Then separate the principal from the interest and penalties. What good looks like? You can state the exact amount owed today and point to the part that's compounding daily. Move 2. Request a remission of the GIC. If you have a genuine reason the interest should be reduced, the ATO says you can ask for some or all of it to be remitted. Use ATO online services or the ATO contact channels, explain why the debt arose and back it up with supporting facts like hardship, an error, or attempts you made to pay. Step by step, use ATO online services or call the ATO, explain why the debt arose and why full GIC shouldn't apply, and submit supporting facts such as hardship, errors, or payment attempts. What good looks like? Your interest charge is reduced or removed where the ATO accepts your case. Move 3. Respond before your debt is referred externally. Read any ATO letter, SMS, MyGov message, or phone request immediately. Then call or message the ATO before the pre-referral warning deadline passes. If you can't pay in full, set up a payment arrangement. That's what keeps the debt with the ATO rather than Recoveries Corp. 3 steps. Read every ATO letter, SMS, or MyGov message the moment it arrives. Contact the ATO before the pre-referral warning deadline and set up a payment arrangement if you can't pay in full. What good looks like? Your debt stays with the ATO instead of moving to an external collector. Why does this matter right now? In 2021, the Inspector General of Taxation published a review of the ATO's debt collection approach, signalling real scrutiny of these powers. From the 29th of January 2024, debt cases may be actioned by the External Agency Recoveries Corp, according to ATO guidance. And into 2026, the ATO continues to state that unpaid debts attract automatic GIC and may move to firmer or legal action if ignored. The direction of travel is one way, Nike was tighter. Once you've acted, verify it. You should see your balance split into principal, GIC, and penalties in ATO online services. Confirm that any remission decision is recorded against your account. And if you set up a payment plan, check the schedule actually appears. If it doesn't show, ring the ATO and confirm it's active. Everything here comes from the ATO's own If You Don't Pay guidance, ABC News reporting, Legal Vision's analysis of Pay Now, Fight Later, and the Inspector General of Taxation's review. All the links are in the description so you can read the fine print yourself before you act. So now you know what the ATO can legally do, why your debt grows daily, and the 3 moves to take back control. Next week, we're breaking down how to set up an ATO payment plan that actually gets approved, the wording and timing that make the difference. If this saved you from a nasty surprise, subscribe so the next breakdown lands in your feed. We read the fine print so you don't have to, and we'll see you in the next one with your money in mind.